Let's talk about something that's probably crossed your mind. You know how some people manage to ride the waves of the stock market with a smile, raking in those profits, while others seem to get stuck in the flow? Well, let me tell you, it's not all about those fancy lines marked up on your charts or even the best insider tips and knowledge. Believe it or not, a lot of it is boiled down to what happens up here. It's the way that we coach and talk ourselves through the highs and lows of trading that make all the difference. Not just about the numbers. It's about tuning up our mindset and steering our thought ship with confidence and keeping our cool when the market does throw those curveballs, because you know it will. And we're gonna get into how to shape up those mental reflexes and shift your mindset to unlock that hitting trader genius I know you have in you. The first step is gonna be understanding the power of your mind. I want you to picture this. You just got into a trade and things are starting to look up. You're seeing some green, but then out of nowhere, the market does a little dance. Now we're in the red. So the question is, do you stick it out or do you bail? Here's where the magic happens. When you have a solid trading plan and you have the ability to keep your cool, then you're gonna navigate these choppy situations like a professional. In his game-changing book, Trading in the Zone, Mark Douglas shines a spotlight on our psychological makeup that, believe it or not, can play tricks on us while we're trading. Unpredictability is just a part of trading. We can't tell the markets what to do as much as we'd like to think that we can. What we can do is master our response to whatever the market throws our way. And so you have to understand, yes, we're doing our technical analysis. Yes, we're looking at the fundamentals, but you and I with our 5, 6 shares, contracts, whatever, we're not really moving the market. You can look at any stock and you can see the percentage of normal, everyday retail investors that have shares in that stock. And then you can see how much are institutional. So don't fight them, go with them. So that's why you have to keep your cool. So where we are right now, let's get into 4 key things that you can start doing today that are going to completely change and improve how you approach trading psychologically. When the markets are wild, your emotions are on the line. They can be your best friend or your worst enemy. So what's the secret to that? Discipline. What you want to do is you want to cling to your trading plan like it's your lifeline. That's your main bread and butter. And so once you have that in place, you're basically just watching and waiting. The stock market's unpredictable, so having that trading plan acts like a dependable guide. A crystal clear trading plan that's laid out is literally like having Google Maps for your trading. It's going to show you the way, it keeps you on track, and it silences out those emotional gremlins. Now let's move on to the second thing. Patience. I'm gonna say this again. Friend, patience isn't just a virtue. In trading, it's literally a strategy. It's the art of waiting for that perfect moment that sets apart those small random profits from true large long-term success. Think about it like waiting for your perfect pitch in baseball. I don't know if any of you guys are into baseball, but you're not gonna hit at every single ball that gets thrown at you, right? No. In trading, it's the same thing. Rushing is gonna lead you to some pretty rough outcomes, like losing more money than you thought you ever would, or getting tangled up in some mess or fees. You don't want any of that. What does patience look like in trading? It's finding the perfect time to strike, and then it's guided by studying the market, studying the price action, and also having a strategy, not going off of gut reaction or your feeling. So this means that you're waiting for an undeniable signal that screams, it's time. There's no question about it. Instead of just jumping at shadows because you want to trade. Being patient is going to help you spot golden moments for the best trade. It's about quality over quantity. Next is going to be risk management. Let's break that down. Risk management isn't about being cautious. It's your way of staying in the trading game long term. It keeps you from losing too much. So the first step in risk management is risk tolerance. How much can you risk? How much are you comfortable putting on a single trade? There's a rule that floats around investing: never risk more than 1 to 2% to maybe 10% of your entire portfolio on any single trades. Just for example, if you had a $5,000 account, then that means that you should keep your risk per trade to about $50 to $100. That way you're not losing too much on any trade. The next key thing of risk management is going to be using stop losses. Stop losses are literally like a safety net. It catches you or your trade if you fall. And so you can set them to either be firm and stay at a certain position, or it can be flexible, which would be something like a trailing stop loss. These stop losses are going to be crucial for keeping those huge losses at a minimum. And another thing is going to be the position size. So how much are you actually entering for this trade? Have you heard about position sizing tools that you can actually use and integrate directly into your charts? If I could explain it, it's like having a trading GPS. It's a visual that you use. So it's going to show you your input, which is where you want to start, your entry. It's going to have the take profit, the place where you want to call it a day, or even the safety net, your stop loss. And then even better, it calculates the risk reward ratio for you. Honestly, it's kind of genius because it translates that complex math of, well, what is my position size? How much should I actually put in this trade based on my portfolio size and how much I want to risk? It does all the work for you. And it shows you exactly how much you stand to gain or lose if the stock moves to the specific point that you highlighted. The last thing that I want to talk about is FOMO. FOMO, or the fear of missing out, speaks to the child in all of us. If you've ever felt the feeling that I gotta have it now, when you're scrolling through the latest stock and seeing who's rallying, or what was the hottest call out on Wall Street bets, when you see that stock skyrocket, especially one that you were this close to buying, friend, that's FOMO, and it's more common than a cold. This is what you do. If you ever start to feel FOMO clouding your judgment as far as trading, just stop, pause. That's it. Hit the pause button and sit back and remind yourself of your actual game plan. If you don't have a trading plan, I would suggest not to trade, because you know the saying, fail to plan, plan to what? Because investing is your journey and it doesn't follow the same map as anybody else's. And always strive forward on your own terms, not because the market is going crazy, not because somebody called something out in the Discord group. So with that being said, the last thing I want to leave off with is just build a winning trading plan and be disciplined with it. Start to incorporate exact entry, exit, and profit targets. Make risk management your best friend when you trade. And so this is what's going to be the blueprint to keep you away from guessing and guide you towards more disciplined, strategic trading. That's where the money is. All right, so that's it. So if you like this video, please make sure you click that thumbs up button for me. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. And I'll see you on the next one.